Let me also join Kadimbire for welcoming you to our, hopefully, the last press conference on monetary policy matters of the year. Today I'm going to be very telegraphic and brief so that we can leave some more time for discussion. So let's start with the decision of the Monetary Policy Committee meeting. As you know, the committee met yesterday, and they have taken a decision to leave the repo rate unchanged at 6.7%. Again, as before, we believe this rate is appropriate to continue maintaining the one-on-one link between our currency, the Namibia dollar, and the South African rand. But we also believe that this level of interest will still continue to support economic activities in Namibia. So, briefly on the developments that underpin this decision of the Monetary Policy Committee, starting with the global economy, nothing has changed much compared to what we have told you at the previous Monetary Policy meeting as far as the global economy is concerned. We have seen figures for advanced countries and some emerging markets countries and developing countries for the third quarter of 2018. We are seeing a mixed picture there. When it comes to the advanced countries, we see countries such as the US, countries such as the UK improving their growth rates, but we have also seen the euro area slowing in terms of their economic growth, and also Japan slowing down in terms of their growth rates. The same picture continues when we go to the emerging markets countries and developing countries, with countries such as Russia, India, and South Africa showing some improvement in the third quarter of 2018. However, you still have China slowing down, although the slowdown is not that significant because China is still growing in the above 6%, but a small decline in growth in China, and a decline in of course Brazil. Brazil. So those are the countries, the emerging markets countries, that have shown some decline in growth. But again, as I said, for China, it's not something that we should be concerned about because it's still growing above 6%. If you sum up these numbers for the global economy, we still believe that the global economy is robust enough. The forecast for 2018 is that the economy is still going to grow in the region of 3.7%, which is the same growth rate that was registered in 2017. So if we compare 2017-2018 to where we were in 2016-2015, we can see the global economy has improved quite significantly. Although for the 2 years, the growth remains flat at 3.7, which is still respectable compared to where we were before that. If we continue to grow at that level, I think the world will be in good shape, especially if growth will remain distributed evenly among many regions of the world. However, there are risks on the horizons that could derail this growth picture going forward. One of it is, you are aware of it, the Brexit. We don't know when, if Brexit, whether it will be without a deal or with a deal, and we still, all of us are still trying to understand the impact of that. What will be the impact on the global economy if there is a Brexit without a deal? Hopefully we will not have that outcome. The trade wars, we have talked about it earlier. We are happy that the parties are finding each other. They are talking to each other. There is, understand, a truce now, or a ceasefire of some sort. We just believe that this ceasefire will help us to end the trade wars, so that the global trade can continue again, unaffected by trade wars. Because as I said earlier on, or in the previous monetary policy conference, trade wars are not beneficial to any country. And therefore it's pleasing to know that the parties are finding each other, and hopefully that will end up in stopping trade wars. So these are risks that we are seeing on the horizon that could derail the positive picture that we are seeing on the global economy. When it comes to Namibia, domestic economic activities, the picture has not changed from what we have told you earlier. The domestic economy still remains weak. For the first 10 months of 2018, we have seen some indicators that still point to the fact that the economy still remains weak. We have seen sectors such as agriculture, sectors such as wholesale trade performing poorly. But there are bright stars. The mining sector is growing quite fast, above 10%. We have also seen transport and communication also registering better growth rates. So there are these sectors that are pulling us in the right direction. There are those that are pulling us back, like agriculture and wholesale and retail trade. When it comes to inflation, I think the picture is also positive. If we compare the average inflation rate for the first 10 months of 2018, we stand at 4.1, and please underline this because it's important when we are negotiating our cost of living adjustment. People still think that inflation is in the region of 10%. We have not been in that territory for quite some time. Inflation it's around 4.1. That's the average of the first 10 months of the year. We believe that going forward, inflation is going to average for 2018 to average around about 4.3. So the average will remain there. If we compare where we are now, average of 4.1 for the first 10 months to the corresponding period of last year, we were standing at 6.4. As you can see, that the trend has been downward. Over the last 3 months of the year, we have seen an uptick in inflation, with the rate changing from 4.4% in August to 5.1 in October. Still remains within reasonable levels. For 2019, our forecast is that inflation is going to average at 5.4. Again, not 10%, not 7%. That's the level where we think inflation is going to be, still remaining within reasonable levels. When it comes to private sector credit, again, the picture has not changed. Still the same. Private sector, the growth of private sector credit remains that of a slowdown. If we compare the average for the last 10 months of the year, we have seen a further slowdown to 5.8%. That is, the growth in private sector credit is still growing, but the speed is slower. Because if we compare to the corresponding period, it was in the region of 7.1%. Not as a big decline, but you see the growth is there, but it's slower. The good thing is that they still life in private sector credit, in the sense that we're still seeing positive real growth, because this growth in private sector credit it's much higher than inflation. As I said, the average inflation rates are low, and therefore you see a real growth in private sector credit. We just want to see more credit going for productive purposes, more for investments than for consumption, because we are a bit worried about seeing more consumption activities or people restructuring practically their consumption loans. So that's something that we're concerned about. We understand it's the economic situation is much difficult. We all have to survive, but again, it's important that we spend money on things that are going to help us as individuals, but also things that are going to help us as a country. That's the picture on domestic credit. Over the last 3 months of the year, 2018, we have seen a small uptick with the rate changing from 6.3 in August to 7% in the month of October. So you see again an uptick in private sector credit. International reserves, we still believe that they remain within ranges that will support the link between the Namibia dollar and the South African rand. Previous time when you were here, we told you that the reserves were standing at about 32.5 billion. It has now edged downwards to about 31.1 billion. over the last few months or so, especially in the month of October and November. That's now for October. November, we are still finalizing the November figures. We have seen some outflow. Obviously, this is typical during this season because companies are now stocking up for the festive season because we're all going to have a party. So hopefully we will not exaggerate the party. So that has put a bit of pressure on reserve, and that's why we have seen a decline in the reserves compared to where we were in October when we last met you. But as I said, still remaining within or still remaining sufficient to support the one-on-one link between our currency and the rand, and also to meet all other international obligations that Namibia has towards other countries. Expressed in terms of import cover, standing at 4.2 months of import cover. So as you can see, this is still remaining within reasonable levels. We are continuing to watch the situation to see how reserves are going to develop or after the festive season, whether these outflows that we have seen in the last few weeks and last few months of the year are continuing or they will slow down. So that's something that we will continue to watch. So, ladies and gentlemen, this is more or less the summary of what has underlined the decision of the Monetary Policy Committee yesterday. As I said, the decision is to keep the rate unchanged at 6.75%. I thank you.
Thank you. My name is Kevin. I'm a writer with a Villager newspaper. 5 times, if I'm not wrong, 5 times now have Namibian consumers, motorists, experienced a hike in fuel prices. And recently, fuel prices decreased a little bit. What's your immediate projection? Do you think this is likely going to impact on inflation as far as the reduction in the prices are concerned? My second question, we're now in December and we are saying that looking back from where we started, the economy hasn't really been performing well. And do you think that this is the worst that we've ever been? And what are we doing wrong in those sectors where we are not seeing growth in retail, in agriculture? Do you think that we're doing the right things as far as responding to the shocks that are coming in agriculture, the drought and all that? Do you think that we're doing the right things in order to save the situation?
Right. Good morning, I'm Jo Marie Daddy from Namibia Media Holdings. Governor, traditionally the bond sort of tracks what happens at the South African Reserve Bank. To which extent were you worried that should you increase the rates now, that the consumer wouldn't be able to take the punch?
Kevin, any relief in terms of fuel or energy prices is always good for the consumer because it's going to leave us with additional income. If we are spending an additional 10 Namibia dollar to buy petrol or diesel, and we have been given relief, it's a good thing for the economy. It's a good thing for the consumer. It's also a good thing for inflation because fuel, it's a significant driver of inflation. You have seen when fuel prices increase, we see transport inflation going up. We see that having a negative impact on the overall inflation rate. And therefore, the announcement by the Minister of Mines and Energy that there will be some relief, that's a welcome development. And we believe that it's going to have positive impact on inflation. That's why we also don't think that inflation is going to run away. As I said, we are focusing for 2018 as a whole, 3.4 on average, 5.4 4.3 on average for 2018, 5.4 on average for 2019. So it's a good development, and again it's linked to what we see in the global economy. Or you know that fuel prices have come down quite significantly. Probably when you were here, there was still fuel prices were still in the region of $80 a barrel. It's now hovering between 60 and 59, somewhere there. It keeps on changing, but remaining more or less in that 60 zone, which is a good development. That's why the minister was able to pass on the relief from the reduction in the global price to the domestic customer. Yes, Kevin, this is why is the economy not getting out of this difficult situation? Again, it's important to understand this is that the difficult situation, we should see it in the global context. In the global context, as we say since 2008, when the financial crisis started, the world economy has been in a very, very difficult spot. Although it only caught us later when commodity prices collapsed in 2015-16, our neighbors were under pressure. Again, we lost that revenue from our neighbors, both south and north, Angola and South Africa. So with the global economy improving, with the regional economy hopefully improving, because we expect to see a positive growth rate in Angola next year. This year, Angola is still registering minus growth, and even last year, minus growth last year, just like we have seen in Namibia last year. South Africa, they released their numbers yesterday. Growth picture much better, but of course not as strong as we would want to see that. But the regional picture is improving, and hopefully it will continue to improve. If it improves, we need to continue doing the right things, with us here consolidating so that we create fiscal buffers. In other words, balance our fiscal positions so that we create a strong and a solid foundation for the economy, that we will improve. But as you know, good things take time. You can't fix the economy in a few months. So we're still positive that the economy will improve, but it will take time. So we just need to continue to do the right things, reforming, consolidate, as the Minister of Finance is doing, and also making sure that we focus on the sectors that we have identified as sectors with potential, and just improve the speed of our implementation. So I think that will help us to get to positive territories faster than now. So that's what we need to continue to focus, not to lose hope, because an economy is not something that you fix in a day. It takes time, and that needs all of us to work together. I hope that gives you a bit of a picture there.
Yeah, my critical question is this the West that we have been in?
Well, we have gone through cycles. The economy go through different cycles. While we have seen the economy declining, and if I remember, I think 1992, you were probably still a very young person if you were born that time. The economy shrunk, and I think also in the region of probably during the Asian crisis in 1997, 1998, we probably have seen the economy slowing down or even shrinking. So it's not for the first time that we see this, and it's not only unique to Namibia. It's a phenomenon that affects all the countries. As I said, globally, that has been the case. In 2008, the U.S. economy, the world economy actually shrunk because there was an economic crisis, and that has brought us where we are today. So it's a normal situation. So what we should always remember is that we should always be prepared for such kind of developments. We need to have enough ammunition in such a way that, again, just like at the personal level, when you are hit by a negative development, you must have some savings to recover from that. At the country level, it's the same. When we were hit by the financial crisis, our debt level was quite low. So we were in a better position. So we just need to again do the right things to make sure that we create a solid foundation, so that if we are hit by another negative development like that, we are able to recover from that. So it's not something unique to Namibia. It's not something unique for this period. It happens all the time. What is important is for all of us to be always prepared at the personal level, as I said, and also at the national level. Yes, Jumeri, you are right that our interest rates are aligned most of the time to South Africa, and it has to be aligned because of the link between the Namibia dollar and the South African rand. But you also noted that when South Africa reduced interest rate, we did not follow suit. So we remain above South Africa. They have now caught up with us. We are now aligned again, just like before. Again, when you are changing interest rate, you have to look at all the conditions in the economy, including the condition of the consumers. But more importantly, our policy is more to ensure that the currency peg is protected. That's our number one priority, because that will ensure that we continue to import low inflation from South Africa. So that's our number one priority. Secondary, then we'll look at other things, including consumer conditions. So we are aligned. We don't see that the alignment of the interest rate or the repo rate in Namibia and in South Africa will create any pressure for us. And because we have always been aligned before. It's only when South Africa reduced interest rate, they went below us. We remained at that level. So they just came back to where we are. I hope I've answered your question. Yeah?
You predict 5.4 average inflation rate for 2019. Now, in which financial crystal ball did you look to come to that conclusion? Is it because you suspect maybe that fuel prices might go up again in January or February, now that we got the Christmas present from the Ministry of Mines and Energy that fuel prices went down today? And my second question is, quite often in your monetary policy statement, you would also indicate Namibia's economic growth. It's not in here this time. Since you have the data for the first 10 months of this year, could you maybe give us an indication what you predict what Namibia's economic growth for 2018, and I mean the calendar year, is?
Francis Nandi, it would interest me to know whether you think there is continued growth expected in the next year, amongst other, by spending of government, if number one, the tender board doesn't seem to be functioning properly, and secondly, that will we loan money from China simply to give it back to Chinese companies and only in a limited form of employment to our own people. So what concerns me is that at the end of the day we'll show a real growth, but at the end of the day it is not the Namibian people who will benefit out of the employment and the investment as a whole. How do you see that picture working for you?
Thank you.
Stephen from Commerce and Industry Review magazine. My concern is with Angola. Trade with Angola seems to be based primarily on US dollar. Angolans having the US dollars. Going forward, is there any arrangement so that Namibia can have a standard exchange rate between the Namibian dollar and the Angolan kwanza? Just like South Africa has with, say, Mozambique or Botswana. They don't depend on the dollar, but they can exchange their currencies fluidly without any other foreign currency. The arrangement between Mozambique and South Africa, they have got a standard exchange rate. Mm-hmm. They don't have to exchange to the US dollar in order to go to South Africa or the other way around. But here we find that trade with Angola is mostly based on US dollars. There's no proper exchange rate between Angola and Namibia in the local currency.
Right. Responding to the decrease in the fuel prices, the Economic Association of Namibia, Klaus Schad, quite a respectable economist that we have around, say that we need to be, or he submitted that we need to be migrating towards the adoption of electric cars. Do you think that Namibia is ready for that? Is that not like writing down the death sentence for the fuel industry? Are we ready for electric cars in order to forestall and cushion ourselves against these shocks?
Yes, let's start with Brigitte. Inflation, of course, is driven by many factors, but what we pay particular attention to is inflation in South Africa, because inflation in South Africa, our inflation in Namibia is largely depend on the inflation in South Africa. So what we see in South Africa is also again that inflation will remain within that range, below 6%, and again that augurs well for lower inflation in Namibia. Of course, oil prices can upset these numbers because it's difficult to forecast oil prices. As you know, a few months ago, as I said, they were in the region of 80, now it's 60, 50. So this is always, something that is difficult to forecast. But our view is that even if we see an uptick in fuel prices, it will not probably be too significant to change this forecast. But that is a big if. So those are the factors that you will have to look at. Namibia's growth, if you can just be a bit patient with us, we're just busy doing the final numbers for the forecast for 2018 and 2019. So hopefully within the next few days we will release revised numbers again. So probably next week or so we will release numbers for the economy. So we just left it deliberately out because we're still doing the final touches on the outlook. But we'll have a separate release for that. Okay, Postrick? Yeah, is next week or so, hopefully?
Next week.
Okay. Okay, I think there was a question on whether we still hope to see positive economic growth with money leaving to China, company projects being given to the Chinese company. I think what is important is that we need a combination of domestic businesses, and I think our procurement policy now makes provision for that, so that when you award tender, more consideration needs to be given to Namibians. But of course, that does not discriminate against foreign players, which you also need for competition purposes. This is not really my area of expertise, and therefore I will leave it to the Minister of Finance to talk about the tender issues. The gentleman who was talking about Angola and Namibia having an exchange rate that is more or less stable. These currencies trade on the market. It's not regulated. So in other words, the exchange rate between the Kwanza and the Namibia dollar, it's basically market driven. It's unlike the exchange rate between the rand and the South African, or the Namibia dollar and the South African rand, which is, by choice, we have pegged our currency to the rand, and therefore that is fixed. This is determined by the market. If there are people who want to exchange more Namibian dollar, of course that will directly go through the US dollar to determine the rate between the two exchanges, which is not regulated by anybody. You were referring to Botswana and Mozambique. I'm not sure whether the exchange rate between Mozambique and the rand is I don't think they have a fixed exchange rate in Mozambique. I think is more or less really floating. So if you come to South Africa, you don't come with net cash there.
Yeah, they don't. But the thing is, they can exchange money freely, unless Namibia, Angola, where the last time we had you talk about that, it was about some arrangement from Onjiva, banking Onjiva, where they can buy the Namibian dollar from there in order to come to Namibia, something like that.
Okay, let's look at it from this perspective. Let's start with Mozambique. If you want to come and buy in South Africa, you probably have to have US dollars.
No.
Or you have to have rands.
Yes.
Right?
You just buy rands anywhere.
Yeah. You probably have to buy those rands in Mozambique, right?
Yeah.
Not in South Africa.
Not in South Africa.
It's exactly
the border.
Yeah, it's exactly the same here. If you want to go to Angola, the only unfortunate thing is that nobody here will accept Kwanzas. And therefore, nobody is going to give you Kwanzas to go with Kwanzas to Angola, because they don't carry them. But otherwise, they could give you Kwanzas, but you need to give them Namibian dollar here. I'm not sure whether you understand the difference. So the Mozambicans if you have met cash, will just like US dollars, you go to your bank, get the rand, and go to South Africa and buy with rand. But it means you have actually changed your domestic currency to a foreign currency. It doesn't matter whether it's a rand or whether it's a US dollar. It's exactly the same for Mozambique. Because this rand for Mozambique, they just have to earn it just like they have earned the US dollar. So it's not given to them free of charge. So it's exactly the same. The only thing is that the banks here will not give you kwanzas, but if you want kwanzas, you can easily, if you go to a bank in Santa Clara and you want to give them an Namibian dollar, I'm sure they will give you kwanzas, because the Namibian dollar is something that they need, because they have people coming here to buy. The banks here don't keep kwanzas because it's just a difficult currency for them to manage. But it will be exactly the same.
It's exactly that difficulty when are we going to sort that difficulty in order to increase trade between the two countries? Angola is very important for Namibia in terms of trade.
Yeah, again, that's market determined. If there are more people who want kwanzas to go to Angola, because when you go to Angola, you want to go with US dollars, because most of the business they will more or less accept US dollars than kwanzas. So if that demand for kwanzas doesn't improve, it makes it difficult for you to trade in kwanzas. So it's more the demand for kwanzas. If you have more people who want kwanzas, you will find a market in kwanzas. At the moment, you have more people who want the other currencies and want to sell their kwanzas to get the other currencies. And therefore, that's why the market doesn't see the need for them to hold kwanzas. I don't know whether you understand that part. Yeah, so it's market driven. It's not, you can't regulate it. What did Kevin want? Electric cars. Yes, Kevin, if anything that is going to help us to reduce dependence on oil is always good. So if we can get more cars that are driven by electricity, and hopefully we'll be able to produce cleaner electricity. The problem is also because people are not moving away from, or trying to move away from fuel, because it has got some damaging effect on the environment, to electricity, and hopefully we will also find better ways, and we're increasingly finding better ways of producing clean electricity. So that's a good thing for the environment. So I think it's something that we should all welcome. So if you see an electric car coming, so please buy it. It will be good for the environment. I will also want to buy an electric car.
And bad for the fuel industry.
Bad for the fuel industry. Fortunately, we don't produce fuel here in Namibia. Yeah, but when you find oil, we'll probably scratch your heads and say, it's not good for our industry. Yeah. But at the moment, we can produce electricity with the sun, but we don't produce fuel. So electric cars will be welcome. Yeah.
Thank you very much, Mr. Governor. My name is Franz. I think for me, for some time, I observed that the Monetary Policy Committee, they make this decision to keep the repo rate unchanged. I'm now trying to understand, because I'm thinking perhaps the Monetary Committee can use that space, that monetary space, also to inject investment in the country, as opposed to just moderation. Because for me, the way I see it now, you are just moderating the exchange rate. But the point of investment, triggering investment or activity in investment, you are really not doing that by just moderating the exchange rate. I feel like as a committee, they could perhaps use that monetary space to inject with regulatory that can enhance that. So it's just a perspective. Maybe you can also entertain it. Thank you.
Okay. Maybe just explain what you mean by injecting investment. Are you saying that we need to reduce the interest rate, or what do you have in mind there?
My observation is in a trend with the committee to keep it changed. But over and over, if one assesses your statement, you do express the desire for us not to be consuming, but to have productive activity in the economy. I'm thinking now, why can't Monetary Committee also think other measures to inject in the economy? Because policy advice that inject in the economy. I don't know whether I'm clear, but something in that line.
Oh, okay. So maybe you can help us again. What do you expect the bank to do specifically?
I feel like the bank, to some extent, they do have a mandate in terms of directing fiscal policy in accelerating economic growth.
Okay. So I'm just trying to understand your question so that I can answer it better.
Yeah.
So you believe our role is also to tell the Minister of Finance that when you're allocating the budget, you must make sure that you spend money on water and electricity and rail and things like that. Is that what you have in mind?
Not exactly, but with proven economic foresight of like this kind of prediction that you do. I'm sure in another way we could do that, but in a different way.
Okay.
Are there any last questions? This is the last round.
Maybe just to ponder forward, we are looking at a possible constitutional amendment in South Africa regarding land. This is likely to cause massive shocks in the market, even on the rents. Do we have, or are you looking at some mechanism to absorb these shocks, should and if it does come?
Let me try and see whether I can address the issue of investment in Namibia. I hope I understood what you want us to do, but maybe the first thing to do is to sketch to you our mandate. Our mandate, of course, is to manage the exchange rate, manage the interest rate, manage the foreign reserves of the country, manage the payment system infrastructure of the country. That's why our mandate. I'm sketching it to you so that you understand what we are responsible for. Of course, we are also a fiscal advisor to government. So in other words, we express a view on the budget, for instance, but expressing an advice. So and we do that. So that way, you could probably argue that yes, that's how we encourage government to invest in the appropriate areas that will encourage economic growth. I think that's what you're talking about. Yes, we do. We always have a discussion with the Minister of Finance. We exchange information and views on where we think Namibia needs to put more emphasis in terms of allocation, and also in terms of what needs to be done to balance the budget. So we do that, and we will continue to do that. And I don't think Namibia does not have knowledge as to where we should put more emphasis, because if you look at our national development plans, if you look at our Harambee Prosperity Plan, these things are clearly set out there. So I think, in my view, we just need to continue to doing that. And in fact, as I said before, the speed of doing things is what we need to improve. It's not lack of information as to what needs to be done. It's doing it and improving the speed. But as far as a monetary policy concerned, committee's job is concerned, it's basically to manage the interest rate. It can't do anything more than that. That's the job that you have given us, and that's what we will do. We can't do anything else. I hope I have addressed your questions there. The gentleman who have asked about South Africa's land issues. Let's stick to the monetary policy issues. Safest to say, South Africa is an economy that is important to us. It's an important neighbor, and therefore we just hope that things will be done responsibly so that it doesn't create uncertainty for Namibia. If it does, we will have to reassess our situation and see how to protect ourselves better. But I would not want to go into the demerits and the merits of what is happening in South Africa there. But we can have a different discussion on that. Well, end of the year. I want to wish you a Merry Christmas and a very prosperous 2019. Hopefully it will be prosperous for all of us. As we unwind the year, so let's unwind, but also unwind responsibly, and that's a message that I want to send to the rest of the Namibians. Let's think about our budget. Let's not unwind in the irresponsible way so that we spend all the money that we have. There will be school fees to be paid next year. We still have to pay our mortgages. We still have to leave money for the drought year. And people talk about the rainy day, and elsewhere here we talk about drought. So we don't even know whether we'll have enough rain next year. So we need to prepare for that at the personal level and at the national level. Again, thank you very much for the patronage. You have always been coming here. We had very good exchanges. So let's continue on that front next year. Thank you.